I'd just like to start this session by introducing very briefly to a moderator for this session, Andy Holm. So Andy Holm is a senior metals columnist for Reuters. He's been writing about metals and other commodity markets since 1987. And I think you might have seen in the last few weeks, he's put out some very good articles on tin. And I've had the pleasure of having moderate some tin events that I've been part of before as well. So I'd like to hand you over to Andy now, who will be moderating this session and will be introducing you to the speakers that we have. Over to you, Andy.
Yeah, thank you, Tom, and welcome everyone to our producer panel this morning. Let me introduce you to our three speakers. First off, we have Andrew Davies, who was appointed Managing Director of tin producer Thaisarco in 2019. During his career, Andrew has developed extensive engineering and operations management experience in roles at the Aluminium Corporation, Apollo Metals, Alcoa, and 5N+. Andrew has a degree in electronic and electrical engineering from the University of Manchester. Welcome also to Mark Thompson, who is Director and Executive Chairman of Tungsten West Limited. Mark holds a BA in Physics from Oxford University and has 27 years of experience in financial markets, commodity trading, minerals exploration, and mine development. He sat on the boards of several listed companies with particular expertise in tin, tungsten, copper, and in the southwest of the United Kingdom. He consults widely within the metals and mining industries and works as an expert witness in metals and mining related commercial litigation. He is also director of TSX listed Meridian Mining. And welcome to Dharam Kotecha, director of Halcyon Inc. Dharam moved to Bukavu in the Democratic Republic of Congo in 2014 after a career as an equity and commodity trader at a global investment bank in London. He has joined the third generation family business, which is deeply rooted in various industries from plastics manufacturing to foodstuff distribution in the Eastern Congo. Having been established since 1962, Dharam aims to make Halcyon a symbol of conflict-free and sustainable mineral trade. He also holds degrees from the University of Warwick and London Business School. Welcome all three of you, gentlemen. Just as way of introduction, as Tom mentioned, I have been writing about the tin market since 1987. I have written about the booms, the busts, and more than one or two passing squeezes. And yet this year has still been remarkable. Let us remind ourselves, record high prices, record high backwardation on the LME, record high physical premiums, particularly in the United States, and record low stocks. I have written that, in my opinion, this is a market that is trading as if in scarcity. But let's find out what our panelists think. So I'd just like to start with all three of you. Just give me some quick thoughts, if you like, about how you see this year's tin market and what it is saying to us. Maybe I could start with the man on the ground, or as close to the ground as we can get, with Dharam.
Thanks, Andy. So from our side, whilst we've seen an extreme increase in price, we've not really seen volumes follow, and I'll speak about this a little bit later. We've noticed that the issues on backwardation and restrictions on pricing have in fact scared off some of the artisanals who are scared to engage in the market with such high levels. I'm sure I can see that for industrial miners, this would not be an issue. In fact, it would provide a large incentive to produce more. Though we have seen production volumes from an artisanal sector not really increase, actually.
Thank you. And maybe Andrew, what's your perspective on this year's
sure.
market?
On the sales side, I think we've been quite lucky, but on the sales side, for us, we can't sell enough, really. The demand for tin has been very, very, very strong and seems to continue regardless of the pandemic. On the incoming side, I think we'll talk about it later, but the shipping has caused some problems, but generally, people have been selling sizable quantities of tin concentrates.
And Mark, maybe just give us your brief thoughts about what we've seen this year.
Well, I think it's a taste of what we can expect for the next 10 years and perhaps beyond. I think financial markets are entering a super volatility cycle, where the consequences of now, since the last global financial crisis in 2008, significantly below trend required exploration and mine development, those chickens are coming home to roost. So I expect us to see extreme volatility going forward, more events like we've seen this year. And if we see some supply disruptions, particularly in very tight markets like tin, we could see some very interesting market events.
Thank you. I mean, and I think this is one of the themes, isn't it? We're trying to sort of like separate out, I mean, what has been caused by COVID and the one-off factors in this market and what is structural. And I just really want to sort of ask all three of you specifically about COVID disruption. COVID disruption to your operations, COVID disruption to the shipping sector, which we've all been following. And just sort of like, I mean, whether it's sort of like, I mean, from your point of view, these are sort of like been a series of temporary issues, or whether they've also changed your long-term thinking about your operationals. I'm going to start with Dharam, if I may, sort of like, I mean, maybe just give us a sort of the Congolese perspective on COVID.
Right. Well, if you want a Congolese perspective, then COVID doesn't exist here, quite frankly. There are very little precautions being taken and very little shift in the way business and logistics operations have been carried out over the past year locally. But my view on this is, I mean, I believe COVID is hopefully a one-off. It's not something that is likely to be repeated for several generations. And even then, responses and technologies may make future pandemics more readily brought under control. Though I do think that in the case of tin, some of the supply-demand dynamics may be lasting. Perhaps governmental or industry views on stock of strategic supplies will be permanently altered. I do think longer term that issues focus on energy. Mining, smelting of ores are hugely energy intensive with the recent energy price hikes seen in Europe and elsewhere. And as Tom mentioned in his opening presentation, the power rationing in China, energy usage will be even more a serious consideration going forward. And whilst we've got opportunities on recycling of metals, and particularly in tin, I do not see a supply shift depending on recycled metal for the foreseeable future. And in the case of tin, all of this is particularly relevant given its importance in the electronic sector and also towards improving battery technologies.
But just to follow up something you said there, so from your perspective, I mean, COVID has not really impacted, I mean, either sort of like, I mean, the transportation, the mining of concentrates or international shipments.
No, yes, it definitely has. Though none of the transportation and logistics issues are in place in Congo since it is landlocked. So I will discuss that later. We have seen serious shipping difficulties, but in country, in terms of production and ability to produce and movement domestically, there has been very little change.
Thank you. And maybe I can ask the same question to Andrew. I mean, sort of how sort of COVID affected your business?
Sure. Well, I think when you look at the different areas, so from a freight point of view, freight in and freight out, of course, there's been quite significant disruption there. And I think everybody has seen that, and every industry has seen that. I think it's also forced us to take a little bit more of a look at our business from a risk point of view. And we have risk from a COVID, and we have risk from your inventory position because of the amount of cash it's consuming, and you have risk from the position you have or a hedge position that you have because of the size of the spreads we were seeing. Thaisarco has not had a single day of closure, I'm pleased to say, due to COVID, but we have been extremely proactive on this case, even doing things like relocating 100 people from one side of the island to close to the factory as the island closed down due to COVID controls being imposed by local government. You know, recruiting back retired employees, making sure you've got sufficient skills in place to keep the tin moving, because tin's consuming a huge amount of cash. When you stop moving it, that consumes a huge amount of cash as well. So, you know, we've had to be very, very proactive in this area. We've isolated 150 people individually so that we don't end up with a large outbreak on site and we take it in small chunks, but we take every single risk very, very highly, and even assessing every individual's risk, both in the factory in terms of transmission to others in both directions, and in terms of their risk exposure outside of the factory, from a personal risk point of view, just to say, you're high risk, we're going to test you every day, or you're low risk, we're going to test you once a month or something like that.
Right.
So
right.
Extremely proactive.
One of the things that Tom has already sort of like referenced, and so has Dharam, I'm going to come back straight to you, Dharam, is, you know, when you see a price rise like this, when you see a market like this, I mean, classic economics tells us, well, there will be a supply response, right? This is the incentive for everyone to sort of like step up production. And I just want to ask all three of you some thoughts about that. But starting with you, Dharam, because you sort of said something very interesting at the start, which is that the high price is probably not acting in the way that I might have expected to do so in terms of the mining sector.
Yeah, so here, I mean, traditionally, we have noticed that whenever the price increases, production also rapidly increases. And whenever the price falls, vice versa, the level of quantities, the level of volume produced also decreases. However, in this case, particularly relevant for us is that artisanal tin mining in Central Africa is very closely tied to tantalum, tantalite, coltan, and wolframite tungsten production. Both the underlying metal prices for tantalum and tungsten have drastically risen. Tantalum almost 50% up since the start of the year. Now, what has happened here is we've had some production, some of the artisanals shifting to producing the other two metals. But what I think is the larger issue is the issue over pricing and the inability to pay extremely high prices with the risk of not being able to fix or to hedge at the same time, given the backwardation is so high. So it's become difficult to manage. And secondly, the other main issue is cash flow. With a container of tin concentrates effectively having doubled in price, it's caused a major issue in cash flow situations for many producers, especially when they're unable to export the material from Dar es Salaam or Mombasa, the two main East African ports, for a month or 2 months on end.
It's very interesting. I mean, again, same question to you, Andrew, sitting further down the supply chain, if you like. I mean, from your point of view, I mean, great prices. You must be trying to maximize production, get every pound out there that you can.
For sure. I mean, the tin, the value in the tin is so high that you need to reduce it. You know, you need to reduce that cash consumption. There's a huge amount of cash being consumed there.
Right. And Mark, I mean, just some thoughts about, you know, you kind of are looking at sort of future supply. You're kind of involved with various projects. I mean, what do you think is the ability of this market to react in the short term?
Well, the short-term reaction is going to come from your artisanals, Africa, Indonesia, Myanmar, places like that. From a more, should we say, market investable perspective, it's zero. You know, no one's been really looking for tin since 1985 and the International Tin Council collapse. So with the exception of Alphamin's BC project in the DRC, there really hasn't been a decent discovery for decades. And the projects that are out there is still the same old, excuse me, I'm going to use a technical mining term here, it's the same old crap from the last cycle, a little bit further advanced, but still with the same old problems, either of mineralogy, metallurgy, or uninvestable management teams. So I think for us to see new industrial scale mechanized mining being a significant contributor to additional tonnages, you're going to need to see M&A, and you're going to need to see decent management teams going in there and taking over some of these assets. But I'm a massive skeptic of them because, as I say, most of them are not particularly good or easy, or they have, really high risk profiles from a mining perspective.
Do you feel that, I mean, what's happened in the market this year, the increased, I mean, I've picked up increased tension from, I would say, people who are not normally involved in the tin market. Do you feel that there's a change of mood out there on the investment side, which is going to make new projects easier, Mark, or do you think that's not yet fed through?
Look, there's a generation of fund managers now in their early 30s who were in their early 20s when their bosses lost hundreds of billions of dollars on the last commodity cycle. To say that the general investment sphere is underweight commodities and very gun shy, I think, is a massive understatement. You know, you are seeing some active, some active capital. Some of the hedge funds have been in the space, have done very well, but no one understands tin. It's a very, very small market. Outside of some highly speculative capital, you're not seeing systematic investment in this space. And to the extent that the sector, in the commodity sector in general, is attracting investments, it's going to the usual suspects. It's going to copper.
So you don't see really any change in investment sort of like mentality around the market after the last year?
No. I mean, not at what you should expect for this size of move and for this obvious ongoing deficit, which is, difficult to see how we get out of. Short of artisanal, artisanal mining is going to fill the hole right now. But you look forward 5 years, look forward to 10 years, you look forward to Myanmar continuing to go down in production, Chinese production continuing to go down, and Indonesian production quite likely at some point having peaked, and you start talking about needing to add 50,000 tonnes a year, 100,000 tonnes a year of tin capacity by the end of the decade, particularly when we've got the electronics sector at sort of 10% demand growth at the moment. I simply have no idea where those projects are or where you would even go to start looking for them for that sort of quantity of annual production. So the only moderating factor is going to be price. So long-term floor price from tin today and going forward is much higher than it was a year ago.
That's very interesting. Thank you. So, I mean, the pressure on the artisanal sector then, which brings me back to Dharam. How much potential do you feel there is in terms of actual production from the artisanal section in the Congo?
So I believe there is significant. I mean, I can't quantify it. I wouldn't have exact figures, but there are many artisanal sites, many areas, particularly as you move in towards the center, the interior of the DRC. So as you move in eastwards towards the center of the country, there are hundreds of mine sites which were traditionally exploited during the Belgian times, which have not yet been validated by ITSC or the other traceability providers acceptable to the Western smelters. So the further we go on viabilizing these sites and to getting them online, the production will increase. Artisanals have been around for centuries. I mean, taking a key example, as Mark said earlier, regarding Bissier, the Alphamin project in North Kivu, DRC. Whilst we see significant, huge volumes coming out of that site, the surrounding area is still very much operated on an artisanal basis. So even if there are large tin projects discovered in Rwanda, DRC, or Burundi, the three traditional Central African producing countries, we're never going to see a shift away from artisanals. It's just a way of life here. Many of the artisanals are effectively supporting their local communities and providing livelihoods. So it's going to continue. I do think that artisanal production can increase significantly, but it also depends on the ability for these artisanals to have their materials sold on international markets, which in turn means that they have to be providing or sourcing from validated sites, and so the chain continues.
That's really interesting. That kind of brings me on to a subject I also wanted to ask you about, which is the impact of ESG on the artisanal sector. I mean, obviously tracing and traceability becomes key. I've also been sort of aware of what's been happening in the Cobalt sector in the Congo, where you have the state stepping in to try and create a super cooperative, if you like. Do you see any crossover from what's being attempted in the Cobalt side to the tin side in the Congo?
Not really, because the work on traceability, due diligence, plausibility, etc., on the 3T, so tin, tungsten, tantalum sector, started many years ago, well over 10 years ago. Cobalt, copper have come into the limelight recently, I would say, within the past couple of years. So if anything, that cobalt sector has a lot to learn from what's been implemented on the tin sector, which has come a very, very long way. In fact, if you look 10 years ago, there was an effective embargo on tin exports from the DRC, and now they are a large part of the supply chain. And the word conflict or conflict minerals, it's a bit of a stigma that's associated with this region. But I do feel that in time to come, and actually already, that does not really exist anymore. It's rather a case of traceability and documenting purchases, etc. So we have come a very long way. I would say we're maturing in the sense of ensuring that minerals are compliant from here, and perhaps the cobalt and copper sector can follow to some extent.
Thank you. I mean, I'd like to turn the question to Andrew. I mean, sort of like, you as a customs processing smelter, how does ESG sort of actually impact your operations? I mean, sort of how has it changed over the last 10 years?
Well, I think the ESG has got a little bit stronger, but that's good news, right? I mean, it's good we have these controls in place. It's good that we're looking after the environment. It's good that we're looking after people. These are all good things to be doing. So I don't think ESG is a concern as such. It's a normal way of life that we have to work around. And I think, when you look at some of these things, particularly the environmental projects, especially when the tin price is where it is at $30-something thousand, if you've got a small loss of tin and you're recovering that in an environmental project, it's probably more than self-funding.
Right. So it is a facilitator, if you like, of more production from your point of view, yeah?
I wouldn't say facilitator, but it certainly is not a big cost, because if you wanted to make an environmental performance improvement, if the one that you had not made, when you analyze it properly, you probably find you're going to make a gain from that, or you're going to have an income stream from that. Maybe you'll offset the cost of capex, maybe you won't, but there is something that's going to offset in the opposite direction, is what I'm saying.
That's interesting. Thank you. And again, Mark, maybe I could ask you, as a guy who's sort of like, looking at sort of like future tin supply, how does ESG now sort of like, how do those concerns sort of like, fit into sort of looking at new projects? Are they a hindrance?
No, look, so for us at Tungsten West, we're just listing at the moment, we've actually committed massively to the ESG side, and only because it's the right thing to do, but it has some other upside benefits as well. As a company, it makes it easier to employ good people, because good people want to work at responsible and good companies. And also then being slightly more negatively capitalistic on it, we're solving problems for our institutional investors, because one of the strong messages we get from our shareholders is that their portfolios are now being rated on an ESG and a carbon footprint basis, and it's one of the things they have to then go to their investors and explain. So we've committed to something called the Digby rating, which is a new ESG provider for the mining industry. We're the first developer to get a Digby rating. We're coming at BBB. Just missed a single A. We'll be a single A next year, I hope. And hopefully that means our share price will trade on a higher multiple than it would do otherwise. But in terms of specifically on the tin side, for us, we've got a 4 million tonne a year processing plant. We're only using 2 million tonnes of it because we've introduced X-ray transmission ore sorting. So we've got 2 million tonnes of spare capacity. So we see ourselves as a natural consolidator in the southwest of England to add tin production in alongside our majority tungsten production. We'll be doing 4,000 tonnes of tungsten, 500 tonnes of tin. We'd love to get that up to 5,000 tonnes of tin as well, because we've got the capacity to do so. And doing that, with ESG credentials makes it easier to acquire other projects and to get planning permission and other permissions required to do so.
Would you say that the ESG considerations have sort of like extended, the timeline for projects like yours? Have they made them more difficult? I'm just going to ask that in the context of there's a lot of pushback against mining projects around the world at the moment. And this is not just a developing world issue, it's particularly a first world issue. So I just kind of wanted to, has that been a factor for you, planning something like this in the southwest of the UK?
Well, actually for us, taking over a failed project because the previous management got the processing plant wrong, it's not been a problem because the planning permissions were still extant. But if I was doing this from a standing start, like many projects are down in Cornwall, this is you're going to add a year to your timeline to development, maybe longer, and you've got to bring in the expertise to do it. This isn't going away, so if you don't embrace it, you're not doing your shareholders a service here. And it is going to spread around the world, and we are going to see traceability in supply lines. There is going to be blockchain, I think, inside the next 5 years, being pretty much in every supply chain from concentrates through to metal, because this ability to put a carbon footprint on a widget that you buy, or a car you buy, or a television is coming. And as soon as it's mandated, you're going to need full traceability of every single supply chain that goes into these complex end user products. So you just need to be ahead of the curve on it. And it is basically, consequence is it's never been harder to build a mine. It takes longer than ever. The cost of capital is higher than it used to be. The availability of capital is really, really poor. And perhaps the biggest problem is there just aren't that many skilled people out there for the number of mines the world needs to build at the moment.
And just by way of broader context, we should point out that, where you're operating is a historic mining area, which has, I would regard as fairly mining friendly historically. The whole of the southwest of the UK, yeah?
Yeah, well, we're right next to two very, very large China clay pits, operating China clay pits, employing several hundred people. Been mining there for 4,000 years. But it has. But on the flip side, we're 3 miles upstream from Plymouth, so it has its own challenges from water management, water discharge, issues like that. So, we manage those things extremely carefully and take our responsibilities, very acutely.
Thank you. Okay, I mean, I'm aware that time is pressing on. So again, I just want to quickly sort of touch on sort of like what our panelists think about the prospects for future demand. I mean, we've heard some very positive things from Tom earlier on. I just want to understand whether everyone's thinking along the same lines here. Again, maybe I could start with Dharam on that one.
So I will speak from an artisanal small-scale mining point. The flexibility of our sector, of the ASM sector, to operate at a wide range of prices and the ability to adjust volume at short notice is crucial here, especially as we've seen this year, when there can be wild volatility, wild upswings in pricing and production and demand needs. For these factors alone, I believe small-scale and artisanal mining will continue to remain an integral part of the industry, particularly in developing regions, as I mentioned, where entire communities and their local economies depend on the sector for their livelihoods. The decline of this would also have wide-reaching challenges for governments where such activities are widespread. The rapidity with which new artisanal sites can be discovered and operated is, of course, an ongoing opportunity for the whole tin industry, because it's particularly free of heavy capex and the timescales associated with hard rock mining, which Mark's just gone into.
Yeah, thank you. I mean, how about you, Andrew? I mean, sort of like, I mean, how do you and how does your company sort of look at the future of tin? I mean, over the next few years.
Well, I think tin has a very strong future. I think everything from what we're seeing from what Tom said before, from the EV that's coming in, the 5G that's coming on, or bringing in extra demands on the tin sales side. And as Mark said, there's not a huge amount of new mines coming out. There's a lot of people talking, but not a lot of new mines actually coming to the market. And I think where people are looking at new projects and things like this, they need to be quite careful to make sure they've got, in today's world, you've got a nice, stable supplier or a customer or partner for you, is to make sure that you balance their capabilities, the price, the premium, whatever it might be, as well as with the risk of supply. And I think, when you do larger projects as well, you've got to consider what's important to you, what's important to your customer or to your supplier, as well as you come up with an agreement between the parties. I think those are important factors.
Do you, I mean, given that we're using the word scarcity to describe the tin market this year, does Thaisarco sort of sit down sometimes and think, we have concerns about raw materials over the next 2 or 3 years, or is that not the case?
Generally, no. I mean, generally we've partnered with people that we've done on the long term, and we have a very, very diverse supplier base and customer base by that. And we take products from all over the globe, really. I mean, except the US, pretty much everywhere else, we take tin concentrates from, and even recycled materials from the US. So there is a way, that you can reduce your risk by spreading it out. We're not dependent on a single mine or a single customer.
Thank you. And Mark, I mean, you've already sort of like made a few references to what you feel is, shall we put it, the long-term structural challenge in this market. I mean, it's clear that you think that this could be a problem over medium-term horizons.
In long term. I mean, look, so the hard rock projects that are out there, look, just drop back. The artisanal supply will fill the hole in the short to medium term, because these guys can be quick and nimble, and have always done so in the past. If they don't, then we're in a very, very, very bullish price scenario. Long term, we need fresh hard rock production. There are some projects out there, they're not very good, but they all need sort of $25,000 to $30,000 a ton to work. Which means, in my mind, you need sort of $35,000 to $40,000 a ton tin for 3 or 4 years before these things become institutionally investable or lendable to. So I think that's where we are. So I'm very comfortable with the current spot price being my long-term price forecast for these mines to get built over the next, 3, 5, 7 years. Beyond that, we need to find new sources of supply. And if we get a supply disruption, anything's possible, because there was one thing about the demand side of tin, it's almost entirely price inelastic. Tin is consumed in billions and billions of individual final end product uses, okay, in very small quantities. So whether it's a small amount of tin in flat glass, or whether it's a tin can, or whether it's 3 or 4 cents of solder in an electronic piece of equipment, the price inelasticity is enormous. So the price could do anything before we see demand destruction. So with a bit of a supply disruption, anything is possible, which is why I think we're in this super volatility position on tin. We could easily drop to 25,000 from now. We've had a massive run up. We could easily go to 50,000. I just know it's going to be very volatile.
Just as a follow-on question about the investability of the tin space, Mark, do you see any indication out there that what I would call the mining majors are looking at tin? I mean, they haven't done historically, but we've seen sort of like some of the big miners now pivot away towards what they call energy transition metals, the new metals, if you like. Tin should be on that list.
Yeah, but it would be window dressing at best just to say that they've done it. I mean, 400,000 ton market at $35,000. What's that? $14 billion market for tin. It's nothing. It doesn't even move the needle. So they'd have to own 25, 30% of the market for it to be a meaningful revenue income for a BHP or Rio or anything like that. And the mines that are out there don't have scale. So apart from Alpha Min, which is currently doing sort of 10,000 tons a year and may potentially double production in the next 5 or 7 years if they put a new concentrator plant in, which I think is relatively likely. Where's the scale? They'd be investing in mines doing 1, 2, 3, 4,000 tons a year of tin, doing a few $100 million of revenue. It just doesn't tick the boxes for the majors.
Interesting. Okay, so let's kind of move towards wrapping this up. I mean, I think we all agree that sort of the tin's future is in principle bright. I just wanted to ask what producers can do to really get the most out of this over the next few years. And again, maybe I can go back to Dharam and sort of like, what could a long-term tin price of about $30,000 per ton mean for the Congo?
Can I I think Dharam's just messaged me saying he can't get any audio at the moment. So I'm just popping back on just to mention that. Okay, so maybe just ask the others.
Not a problem. So that's a shame because I was really interested. So Andrew, I mean, again, so like, what can a producer like Thaisarco do now to maximise on this market potential?
I think it's strong relationship with your suppliers and your customers, more so on the supplier side, I think, to make sure that you've got, a reliable, continual supply of concentrates coming in. I think that's very, very key. And of course, when you're selling, you try and sell as the highest value-add product you can. Thaisarco many years ago diversified into value-added products, so we don't sell at a tin price, we sell as a premium product. And one of the things we've noticed as we've done that is we're actually selling more than the 47-50% of solder, or what material goes into electronics, if you like. Thaisarco's output is probably higher, or it's definitely higher than that. So we're making a premium on both ends, and I think that will continue.
All right, thank you. Are you back with us, Dharam?
The joys of being in the DRC.
Yeah, can you hear us, Dharam? Not obviously. So again, like maybe back to Mark, sort of like, long-term opportunities. You represent a small entrant, if you like, to this market. What are your thoughts about? What's the potential for a long-term tin price at this sort of level?
Well, just talking more generically for the market. I know what we're going to do at Tungsten West, but generically for the market, I think the trap here is actually to do something, and the right thing to do is to do nothing for the miners. Andrew's going to be right. For the smelters, they're going to fill themselves up, their premium to go up, and they're going to make a lot of money just by filling up their smelters. From the mining perspective, don't produce twice as much and sell it at half the price. It's much better to basically just say, actually, we've got a perfect storm right now, do nothing, and the price will go up, and you'll make so much more money in the next 5 or 10 years than you would have done otherwise.
Okay, I might try one last time with Dharam. Are you back with us? No, he's not. I don't think. We're sort of like we'll leave that for the time being. But I mean, it strikes me putting together some themes here that, I mean, short term, we are a market that is going to be reliant on the nimbleness of the artisanal mining sector. That we have long-term investability problems, which have not apparently been changed by the price over $30,000 per ton. And sort of that ESG is now hardwired into this market in what we'd have to say a very positive way.